Hello friends, this is Victor here. Welcome back to the Intelligent Investor channel. Happy New Year. In this video, I'm going to analyze Uber stock to see if Uber stock is really undervalued now. More importantly, I will talk about whether Tesla's upcoming Robotaxi service will disrupt Uber's ride-hailing business in the upcoming years. Just to give you more context, Uber stock has dropped a lot in recent months because investors are very concerned that Tesla's upcoming Robotaxi service may disrupt Uber's ride-hailing service over the next several years. Also, Uber's gross bookings grew slower than expected in recent months, so many investors are concerned that Uber's bookings growth may slow down more going forward. Just to compare, Tesla stock has soared a lot in recent months, mainly because of the Trump trade. Elon Musk has gained significant influence in the White House since Donald Trump won the US election. Moreover, Elon Musk is very close to Donald Trump, so investors are betting that Donald Trump will help Tesla approve its unsupervised FSD and the upcoming Robotaxi service much faster across many states in the US. In other words, Tesla will likely get regulatory approval for the Robotaxi service much faster than expected in the upcoming years. Interestingly, Uber's bookings and revenues are still expected to grow in the mid-teens each year over the next several years. I believe this suggests that the market is likely overreacting to Tesla's upcoming Robotaxi service, which may not disrupt Uber at all. So in this video, I'm going to explain why I believe Uber stock is likely undervalued now. More importantly, I will explain why I believe Uber stock will eventually recover. You will learn about these topics in this video. First, I will talk about Uber's biggest risk to consider. Specifically, I will talk about whether Tesla's Robotaxi and autonomous vehicles will disrupt Uber's business going forward. Then I will talk about Uber's long-term growth prospects, Uber stock valuation, and whether I will buy Uber stock going forward. If you like this video, make sure to hit the like button, subscribe, and turn on the notification button. I will continue to make many excellent investing videos a week that will help you become a great investor. Each video usually takes me more than 30 hours to make. So if you like this channel and want to support it, check out my Patreon blog in the video description. Our goal is to help all our members become multi-millionaires through investing. Once you become a premium member, you can follow all the stocks I'm investing for the long term, follow my personal stock portfolios, and download the latest intrinsic valuation models for all the stocks I'm analyzing, so you will know when a company becomes undervalued, fairly valued, or overvalued now. Also, you will have access to all my latest stock ratings for all the stocks I'm analyzing. The link is in the video description. Take a look, let's start. Let's talk about Uber's biggest risk over the next several years. The first biggest risk is this. Investors are very concerned that Waymo and Tesla's upcoming Robotaxi may disrupt Uber's ride-hailing service in the upcoming years because Robotaxi services are supposed to be much cheaper to operate than Uber's ride-hailing service. The main reason is that level 4 or 5 autonomous vehicles such as Tesla's upcoming Robotaxi do not need drivers to operate. Uber's mobility service biggest operating cost is always paying the driver, so in theory, Tesla's upcoming Robotaxi should be much cheaper to operate than Uber. The biggest issue is whether Tesla can scale its Robotaxi service, have enough Robotaxis on the road, and have enough customer demand to use Tesla's Robotaxi service. Of course, if Tesla can scale its Robotaxi service much more, have millions of Robotaxis on the road, including the Cybercab, Model 3 and Model Y that are capable of level 4 or level 5 autonomous driving and offer much lower prices than Uber, then Uber will lose a lot of market share to Tesla in the upcoming years. This is Uber's biggest risk going forward. Let me show you this clip from Tesla's We-Robot event. Elon Musk explained his vision for Tesla's upcoming Robotaxi service. I think it is very important to understand Elon Musk's vision so we will know whether Tesla will likely disrupt Uber.
So, in fact, I think the cost of autonomous transport will be so low that you can think of it like individualized mass transit. The average cost of a bus per mile for a city, not the ticket price because that is subsidized, but the average price is about $1 a mile. Whereas the cost of Cybercab, we think probably over time, from the operating cost is probably going to be around 20 cents a mile. And price, including taxes and everything else, probably ends up being 30 or 40 cents a mile. So yes, and you will be able to buy one. Yes, exactly. And we expect the cost to be below $30,000. And I think there'll be an interesting, business model where, like, let's say somebody is an, Uber or Lyft driver today, where they can actually sort of manage a fleet of cars, and sort of manage, I don't know, 10, 20 cars, and just sort of, take care of them like a shepherd tends their flock. You have your flock of cars, and you're the shepherd, and you take care of your flock of cars. I think that'd be pretty cool. I think it's going to be a glorious future. It's going to be really something special. So, yes, good, all excellent questions. We do expect actually to start fully autonomous, unsupervised FSD in Texas and California next year. And that's with the Model 3 and Model Y. And then we expect to be in production with the Cybercab, which is really highly optimized for autonomous transport in probably, well, I tend to be a little optimistic with timeframes, but in 2026. So, yeah, before 2027, let me put it that way. We'll make this vehicle in very high volume, but well before that, you will experience a robotic taxi via the Model 3 and Model Y program, and Model S and X too. But your 3 and Y will achieve unsupervised full self-driving with permission in wherever regulators essentially approve it in the U.S. and then to follow in outside the U.S. So, and Cybertruck too, yes, of course. Sorry, I don't want to forget. Yes. All our cars are basically all cars that we make.
Going forward, we will eventually see more level 4 or even level 5 autonomous vehicles on the road that will compete with Uber. The hardest part is scaling these autonomous vehicles. If these autonomous vehicles cannot scale to millions, they cannot compete with Uber because Uber already has around 7 million drivers and couriers on the road. Uber is already covering more than 10,000 cities across 70 countries. Uber is already providing more than 30 million trips per day. More on this later. Tesla and Google's Waymo are the two biggest players that have the expertise and capital to scale their autonomous vehicles. This is why Uber wants Waymo and Tesla to join its mobility platform. Uber understands that Waymo and Tesla can potentially disrupt Uber if they build their own ride-hailing network. Waymo has already joined Uber in certain cities. However, Tesla wants to build its own ride-hailing network instead because it wants to have full control of its ride-hailing service. Of course, Tesla does not want to share profits with Uber. Here is another risk we have to consider. Based on what I know, in most jurisdictions in the US and other countries, Uber drivers are considered as gig workers or contractors. Uber drivers are not considered as employees in most countries. If the US decides to classify Uber drivers as employees, Uber will have higher compensation expenses, which will impact Uber's operating profits and margins. Of course, the issue of gig worker or employee classification will continue for many years. Let me show you Uber's past financials so you can understand Uber's business model better. Uber has had very high and consistent revenue growth over the past 10 years. However, Uber's revenue dropped significantly in 2020 because of the pandemic. At the same time, Uber has benefited a lot from the pandemic because many people started ordering food delivery using Uber Eats, so this food delivery trend will continue for many years, which will also help Uber's mobility business. Waymo and Tesla's Robotaxi cannot disrupt Uber Eats because we still need drivers to pick up and deliver food. When it comes to GAAP profits and free cash flows, Uber is expected to achieve much higher operating income. higher earnings per share and much higher free cash flows over the next several years because Uber's operating expenses are expected to grow much slower than its revenue growth over the next several years. Uber has already achieved the economies of scale and the network effects that are needed to become more profitable. Unlike Tesla and Waymo, Uber has an asset-light business model. Uber does not own the vehicles that are used for ride-hailing and food delivery, so it's easier for Uber to scale its service in many cities and countries. Uber mainly operates its app and software that connect users with drivers and couriers, so it's a lot easier for Uber to lower its operating expenses. This is why Uber's operating income and free cash flows are expected to grow much more than its revenue growth over the next several years. Uber has a fairly strong balance sheet. However, Uber does have more long-term debt and operating lease liabilities than its cash equivalents and short-term investments. For example, according to the most recent quarter, Uber had $9.06 billion in cash equivalents and short-term investments. In comparison, Uber had $12.66 billion in long-term debt and operating lease liabilities. Most of this is long-term debt. Uber will likely use its free cash flow to pay down its large long-term debt over the next 5 to 10 years. So will Tesla's upcoming Robotaxi disrupt Uber's ride-hailing service? I'm going to be a contrarian here. I believe Tesla's upcoming Robotaxi will not disrupt Uber's ride-hailing business because of several reasons. First, I believe Tesla's upcoming Robotaxi service may not be much cheaper than Uber's. Here's why. If you want to make money using Tesla's upcoming Robotaxi service, you will have two options. The first option is to buy the Tesla Cybercab, which will cost around $30,000. The second option is to rent out your Model 3 or Model Y to the Tesla Robotaxi fleet so that your Model 3 or Model Y can start driving passengers around without you being there. In theory, you can make money like an Uber driver, but you do not need to be in your vehicle to drive passengers around. In either case, Tesla will need to make sure that your Robotaxi will have enough rides in order to generate enough revenue that can cover all the operating expenses plus enough profits for both you and Tesla. If Tesla cannot give you enough rides on your Robotaxi, or if the Robotaxi's pricing is too low compared to Uber, then you will lose money investing in the Cybercab, or you will lose money when you rent out your Model 3 or Model Y to Tesla's Robotaxi fleet. Here is another thing we have to consider. Most people do not know this. Contrary to what the market believes, Tesla cannot charge very low fees for its Robotaxi service because Tesla needs to make enough profits from each ride and share profits with you if you rent out your Cybercab or your Model 3 or Model Y to Tesla's Robotaxi fleet. Elon Musk said that the Cybercab will cost 20 cents per mile to operate, or around 30 to 40 cents per mile once we include the taxes and other fees. But this is just to operate the Cybercab. Based on my understanding, these cost estimates do not include how much profit Tesla will make from each ride and how much profit Tesla will share with other Tesla owners. In comparison, according to Google, the cost per mile for an Uber ride is around $1 to $2, which is much higher than the Cybercab's estimated cost per mile. However, Uber already has millions of active users every month. This means Uber is a demand platform that can drive more demand or rides for drivers. In theory, Cybercab's cost per mile should be much lower than Uber's cost per mile. However, in a real-life scenario, we still need to consider the upfront cost of buying a Cybercab, which costs around $30,000. We also need to consider the risk of not getting enough rides and not earning enough revenue per ride if a Tesla owner rents out his Cybercab, Model 3 or Model Y to Tesla's Robotaxi fleet. Again, this means Tesla cannot charge very low fees for its Robotaxi service compared to Uber. Here's the deal. For Tesla's Robotaxi service to succeed and disrupt Uber, Tesla will need to scale both the supply side and the demand side. This is not easy at all. On the supply side, Tesla will need millions of Robotaxis on the road that are capable of level 4 or level 5 autonomous driving. Tesla cannot achieve this large supply without letting other Tesla owners join the Robotaxi fleet. On the demand side, Tesla needs to make sure that there is a very large demand for its Robotaxi service. In other words, Tesla will need millions of active users monthly, just like Uber. Otherwise, if there is not enough robotaxis on the road, or if there is not enough demand for Tesla's robotaxi service, the cost of operating Tesla's robotaxi service will be much higher. This is why I believe Tesla's robotaxi service will not disrupt Uber. Uber's biggest competitive advantage lies in its network effects, which are exceptionally difficult to replicate. For example, at the time of making this video, Uber already has 161 million monthly active users and 7.8 million monthly active drivers and couriers. Moreover, Uber is already providing 31 million trips per day. Uber is also available in more than 10,000 cities across 70 countries. I believe Uber's monthly active users, active drivers and trips per day will increase much more over time because Uber is expanding to more cities, especially into less densely populated markets that are not saturated yet. For Tesla's robotaxi to scale, Tesla will need to have millions of robotaxis on the road. I believe most Tesla owners do not want their Tesla EVs to join the Tesla robotaxi fleet because Tesla EVs are not cheap cars at all, especially the Model S, Model X and the Cybertruck. Tesla EVs can cost anywhere between $30,000 and $100,000 each. Model 3 and Model Y can cost between $30,000 and $60,000 each. This is my prediction. I believe most Tesla owners will not be comfortable renting out their cars to the Tesla robotaxi fleet, letting their cars drive away autonomously to give rides to passengers, and not knowing whether passengers will damage their cars. The insurance cost for autonomous cars will likely be higher because there's always the risk of accidents and injuring passengers. For example, I own a Tesla Model 3 Performance and a Model Y Performance. Both of them cost around 150,000 Canadian dollars in total. Personally, I would not be comfortable renting out my Model 3 Performance and Model Y Performance to the Tesla robotaxi fleet and giving rides to passengers without me being there. If I really want to start making money from Tesla's robotaxi service, I would invest in the Cybercab, but this will be another $30,000 investment. So if we consider all these points, I believe it will be very hard for Tesla to disrupt Uber's business. Tesla cannot offer very low pricing for its robotaxi service because of the reasons I mentioned earlier. If Tesla's upcoming robotaxi service is not much cheaper than Uber, I believe most people will still choose Uber because Uber is already everywhere in more than 10,000 cities across 70 countries. It all goes back to Uber's network effects. In addition, if you want to get a ride as quickly as possible, you will likely book a ride from Uber because Uber already has the most active drivers on the road. Autonomous vehicles are much slower than most drivers because of safety reasons. If you want to get from point A to point B faster, you will likely choose an Uber driver instead of an autonomous vehicle such as Google's Waymo or Tesla's upcoming Cybercab. Again, if we consider all the points I just talked about, I believe Tesla's upcoming robotaxi service will not disrupt Uber. Instead, I believe the ride-hailing market will be large enough for several large players including Uber, Lyft, Waymo, and Tesla. Let's talk about Uber's financials and long-term growth prospects. Uber has these three major businesses: mobility, food delivery, and freight. Uber earns the most revenue and profits from Uber Drive and food delivery, so we will focus on these two businesses. I mentioned this earlier, Tesla's upcoming robotaxi service will not disrupt Uber delivery because we need drivers to pick up food and deliver food to customers. Waymo and Tesla's upcoming robotaxi cannot pick up and deliver food for customers. On the other hand, Tesla's robotaxi service will not affect Uber for at least the next 2 years because Elon Musk said that Tesla will only start producing the Cybercab in 2026 or even 2027. Elon Musk tends to overpromise on the delivery date, so the Cybercab may not even come out until 2027. Over the next 2 years, Uber's revenue is expected to grow by around 15% each year, while Uber's EPS is expected to grow much faster. More on this later. I talked about Uber's biggest competitive advantage earlier, which is Uber's network effects. For Tesla, Waymo, or other AV companies to disrupt Uber's ride-hailing business, they need to create large network effects just like Uber. For example, for Tesla to disrupt Uber, Tesla will need to make sure that there is a lot of demand for the robotaxi service. Tesla will need to have millions of robotaxis on the road, just like Uber, which has more than 7 million active drivers and couriers on the road. Tesla will need to convince many Tesla owners to rent out their EVs to the Tesla Robotaxi fleet. Tesla will need to cover most major cities around the world, just like Uber. In addition, Tesla will need to make sure its robotaxis can pick up customers very quickly, so customers do not need to wait too long. Otherwise, customers will use Uber instead. Moreover, Tesla will need to make sure that Tesla owners who join the robotaxi fleet will earn enough revenue per ride and have enough rides to generate enough revenue. Lastly, Tesla will need to offer much lower prices than Uber if it wants to take more market share from Uber. Otherwise, if the price is very close to Uber, I believe most users will still choose Uber because Uber is very fast and convenient. Uber has a lot more drivers on the road. In comparison, autonomous vehicles tend to be very slow because of safety reasons. So if we consider all these major factors, Tesla's biggest advantage is likely lower prices than Uber because of Cybercab's lower cost per mile. However, as I mentioned earlier, I believe it will be very hard for Tesla to offer much lower prices than Uber because Tesla will need to make enough profits on each ride and eventually share profits with other Tesla owners who are renting out their Teslas to the robotaxi fleet. If you look at this diagram here, I believe Uber has more advantage than Tesla in the ride-hailing market. Disrupting Uber's network effects is not easy at all. Interestingly, according to Google, most Waymo rides are generally comparable in price to Uber rides. We also need to consider that autonomous vehicles tend to be slower than human drivers, so this increases the traveling time from point A to point B. Longer traveling time can increase the riding cost for customers. Here is another important part. Both Tesla and Waymo have invested billions of dollars in R&D, especially autonomous driving tech, so it will not make sense for Tesla and Waymo to charge much lower fees than Uber. Let's take a look at Uber's market share in the US. Uber has been maintaining more than 70% of its US market share over the years, even though it faces a lot of competition from Lyft. I believe the main reason is that Uber has the largest network effects compared to other competitors. This is my prediction. Once Tesla releases its robotaxi service over the next several years, I believe Tesla will take some market shares from Uber, but the impact will be small. Uber will still maintain the largest market share because of Uber's network effects. Right now, it is too early to tell whether Tesla can scale its robotaxi service without using Uber. Tesla will need many Tesla owners to join the robotaxi fleet for the robotaxi service to scale. Otherwise, it will be too capital intensive for Tesla to own thousands of robotaxis on the road. This will impact Tesla's operating profits and free cash flows. Let's look at this guidance from management. Uber's management expects that the company's gross bookings will grow by a mid to high CAGR over the next 3 years. This means Uber's revenue should grow by around 15% each year over the next 3 years. Uber's adjusted EBITDA is expected to grow by a high 30% to 40% CAGR over the next 3 years. This means Uber's operating income and free cash flow will likely grow faster than its revenue growth over the next 3 years. Also, Uber's free cash flow margin is expected to grow much more over the next 3 years. According to this market forecast, the worldwide ride-hailing market is expected to grow from $168 billion in 2024 to around $213 billion in 2029. I believe this trend will benefit Uber because Uber is already in most major cities across 70 countries. Uber also has the most drivers in many major cities. Uber is expanding outside of the major cities in less dense areas because these less dense areas are not fully saturated yet. These less dense markets will have the largest growth opportunities for Uber going forward. Here is another trend that I think will benefit Uber more going forward. Right now, more people are ordering food delivery from DoorDash, Uber Eats, and other similar services because many people don't have the time to buy groceries and cook their own food. For example, I'm always busy. I don't have the time to buy groceries and cook food, so ordering food delivery can save me 1 to 2 hours. I believe this food delivery trend will continue for many years because most people are used to food delivery now, especially the younger gen customers. This is why Uber One now has over 25 million members. Each member pays around $10 per month or $96 per year. Both Uber Rides and Uber Eats benefit each other because both services encourage members to take more rides or order more food delivery. Let me share the most important parts of a recent technology conference with you. Uber's CFO explained how autonomous vehicles will affect Uber's business going forward. He said this.
Our view has not changed that we believe the introduction of autonomous vehicles is going to be critical for us to be able to bring on continued supply to grow the business. If you think about what is one of the largest constraints to our business today, it is adding supply. You look historically, our gross bookings growth is largely correlated to our ability to continue to add supply. We've also shared that if you look at our top 20 or so markets, the penetration into those markets for adults, sort of 18 and over, is still at a relatively low number of 20%. So to really be able to serve the developed and developing markets more completely through a rideshare service, you need more supply, and we think AVs are going to be a key element of that. Now, what is Uber's role as that ecosystem develops? I think it's a couple things that sort of come together. The first is today we have hundreds of millions of consumers who use the Uber app. And that population of consumers continues to grow. If you look at our audience growth rates, we're growing that sort of in the mid-teens. So continuing to have significant growth on that consumer population, and that allows us to play this role as demand aggregator to bring all of those consumers to the various AV providers out there. The second is that our tech teams over the last several years have built very sophisticated algorithms that help really drive routing, matching, and what you need to make the utilization of the vehicles as high as possible. I think that is a very critical element for AV operators, and by that I mean the owners of the car. If you want to maximize your earnings, you need to have passengers in your car as much as possible, and you need the most efficient way to operate that vehicle through that routing and that matching, and that is something that we really can bring to everyone who wants to put their vehicle on the Uber platform. Third is, and no disrespect to the Uber ops teams, we do a lot of unsexy work. It is identifying and confirming that the rider getting in the vehicle is the person who ordered the vehicle. It is handling all the payments activities. Again, high volume payments at relatively low transaction value. It is the fraud prevention that goes with that. It is returning lost items. It is customer service with all the numerous questions and complaints and opportunities to improve service that come with that. It's a very big ops function that we do at scale at an incredibly efficient cost. You put all of that together and then look at how does Uber operate at scale. Let's put this in context. I think Dara might have tweeted this recently. Last week we hit a new milestone for the company where I think it was on Friday of last week, we concurrently had over 1 million trips running at the same time across our 70-plus countries that we operate in. So there is a scale of operation here that allows us to run the network at an incredibly low cost point. And because we're able to do so, we can provide all of those services to prospective owners of AVs at a very modest take rate. And really it's no different than what we do for drivers or fleet operators today, is you put your car or your fleet onto the Uber network, you pay us a modest fee for that service, and there's a substantial amount of the payments from consumers that you keep for yourself. So in a world as this moves to we need AVs to be economical and run for profit, we think that we're very clearly the answer to help companies do that.
Let me show you this consensus forecast from Seeking Alpha so you know Uber's expected growth rates going forward. Uber's revenue is expected to grow by around 17% year over year this year. Over the next 2 years, Uber's revenue is expected to grow by around 15% to 16% each year. After that, Uber's revenue growth is expected to decelerate more. I believe these growth forecasts are very reasonable because they match management's gross bookings guidance that I showed you earlier. In terms of EPS forecast, Uber's EPS is expected to grow much faster than its revenue growth over the next several years because Uber's operating expenses are expected to grow much slower than its revenue growth going forward. Let's take a look at Uber's valuation. I mentioned this several times before. Right now, I'm building an investing software with a friend. This is a preview. Our investing software will be out over the next several months. The orange line represents Uber's fair value over time. The blue line is Uber's stock price over time. The green dotted line is the analyst's average price target over the next 12 months. Here, you can see that Uber is well below its fair value line, an analyst's average price target. I believe this suggests that Uber is greatly undervalued now. Let me show you this intrinsic valuation model here. I always use this intrinsic valuation model to calculate each stock's intrinsic value. You can use it to calculate Uber's intrinsic value, so you will know when Uber stock becomes undervalued, fairly valued, or overvalued. If you want this intrinsic valuation model, you can download it from my Patreon blog. The link is in the video description. These are the key assumptions in this calculator. First, I define Uber's intrinsic value as its future free cash flows discounted to the present day. I used a discount rate of 10.5% here. Based on the biggest risk and the long-term growth prospects I talked about earlier, I believe Uber's revenue will grow between 12.5% and 17.5% in 2024. This is lower than the consensus revenue forecast I showed you earlier. After that, I believe Uber's revenue will grow at a compound annual growth rate or CAGR between 10% and 15% each year over the next several years. This is much more conservative than the consensus revenue forecast I showed you earlier, because I'm assuming that Tesla and Waymo will take some market shares from Uber over the next several years. I used a long-term growth rate of 6.5% to calculate the terminal value. Over the next 5 years, I believe Uber's free cash flow margin will improve gradually over time. Let's go over these 3 case scenarios: worst case, normal case, and best case scenarios. Under the worst case scenario, we forecast that Uber's revenue will grow by around 12.5% in 2024. After that, we forecast that Uber's revenue will grow at a CAGR of 10% each year over the next several years. Uber's intrinsic value should be around $175 billion for the entire company, or $81 per share. I'm giving this scenario a 25% probability here. Under the base case scenario, we forecast that Uber's revenue will grow by around 15% in 2024. After that, we forecast that Uber's revenue will grow at a CAGR of 12.5% each year over the next several years. Uber's intrinsic value should be around $195 billion for the entire company, or $90 per share. I'm giving this scenario a 50% probability here. Under the best case scenario, we forecast that Uber's revenue will grow by around 17.5% in 2024. After that, we forecast that Uber's revenue will grow at a CAGR of 15% each year over the next several years. Uber's intrinsic value should be around $216 billion for the entire company, or $100 per share. I'm giving this scenario a 25% probability here. If we add all these numbers here, Uber's intrinsic value should be around $91 per share. I also use a forward sales valuation model to estimate Uber's intrinsic value, which should be around $154 billion for the entire company, or around $71 per share. If we take the average of both valuation models, I believe Uber's intrinsic value should be around $81 per share. This means I believe Uber is greatly undervalued at the time making this video. So will I buy Uber stock? Yes, I recently started a small position in Uber stock because I believe it's significantly undervalued. However, I plan to maintain a small weighting to minimize risk. Typically, I like to concentrate my investments on the best companies that have very large economic moats, great management teams, great products and services, and great long-term growth prospects. Uber is not a top stock for me yet, but I believe it's undervalued, so I'm keeping a very small position. I believe the market is overreacting to Tesla's upcoming Robotaxi. I believe Tesla's Robotaxi will not disrupt Uber because of Uber's large network effects. I believe most users will still choose Uber because it's very convenient and reliable. Uber has the most monthly active users and the most drivers on the road. Uber already has around 7.8 million drivers and couriers, covering more than 10,000 cities across 70 countries. I expect Uber's monthly active users, Uber One members, number of drivers, and trips per day will increase much more over time. On the other hand, Tesla's Robotaxi's biggest selling point is that it should be cheaper than Uber. However, I believe Tesla will keep its Robotaxi prices very close to Uber's, as the company will need to generate sufficient profit from each ride and eventually share profits with other Tesla owners. Tesla cannot scale its Robotaxi service without other Tesla owners joining the Tesla Robotaxi fleet. This means Tesla cannot charge very low prices for its upcoming Robotaxi service. Now, all these are only my opinions and my analysis that's based on my research. They are not financial advice. There are always risks associated with investing. It's very important to invest in what you know and not speculate. You will need to do your own research and do your extra due diligence first before investing in anything. Thank you for watching this video and supporting our channel. This is Victor from the Intelligent Investor channel, and I will see you in the next video.